Normally I do a interactive Lady Charmer. Hi, Ramon. Right. Normally I do an interactive webinar, but there doesn't seem to be many on there today. So what I'm going to do, unless anybody wants to come in and ask me questions, I'm just going to go through a few things that I personally have looked at in the last hour. You've got to understand, I'm retired now, so I don't do this very often. I don't really look at it that much anymore. And please excuse my voice. I've got a sore throat and I'm having quite a lot of problems talking. Anyway, let's hope my voice lasts out. So what I'd like to look at today is we're going to go through gold, gilts, 10-year, the 10-year bond in the States, dollar index, dollar CAD, and oil. If anybody wants anything else, then please feel free to jump in and have a look and ask me. Okay, now people often say to me, yeah, but where do you know where to buy, how to buy, and timing? You know, how do you get your timing so right? And one of the reasons for me using charts is the fact that they give you exact entry levels. I mean, they really, really do. So if we look at gold, what we've got showing on this chart is, I think it's quite rare pattern, because normally they say double bases hold, triples rarely do. But it did hold. So what you can do is, you know where to place your stops. And the problem with, hi John, the problem with where most traders fail, I guess, is that they don't leave enough room. You've got to understand that you're up against algorithms, you're up against really, really short-term traders. So if you have a feeling for a market and you think that the market is going to bounce or tumble, you don't want to be caught in the noise of everything. You want to have your stops far enough away that even if the market goes against you, you can see it's a blip and up we go. So you've got this scenario here where the market makes a perfect double base and, you know, should have carried on going higher. But when it didn't, when you got these blue bars that couldn't quite get up, and you can see by the closing price, you know, we had a blue day there, but closing price was bad, closing price weren't great, and then you have down days, you automatically flip to your double base scenario, and you look at where is it that you don't want to be holding gold. I had a target on gold of 1611, and it actually went to 1634. So what you want to do is, you want to, if you look at where the low was on this day, when it went to 1614, and your target would have been 1611, you want to then put your stops below it. I know gold's a nightmare to trade, but if you'd have said, okay, everyone's going to be buying around the 1611, 1615 area, you would have put your stops below 1604. And you'd never have got caught, because when we came down again, we didn't go below that low there. So there's your buying area. So you've already mapped out, and there's your buying area. And as I said, off we go. Now, this isn't looking great at the moment. Okay, a little upward waving flag. But you're going to know if you get a close below 617.62. So if we close down below here, okay, that area here, you're going to very quickly know that you're going to see lots of profit taking, and you're going to see people begin to short the market again. That isn't to say the bull run of gold is over, because there's nothing telling us that that is at the moment. It's just that at this precise moment, there is more of a chance of the market coming down than going up. Okay? And you'd want to be buying gold again around about these tops here, which comes in at 1729. Does everybody get that? Yeah? That's clear. Are there any questions on that triple bottom that I've just pointed out to you? Or any questions on gold at all before I move on? No? Perfect. All clear. Now, we've had a lot of noise and kerfuffle about the gilt market. Okay? And you can see why. I mean, all this was just a load of nonsense, really. The gilt market, if you look, started to fall way, way back in time, in the beginning of August. So while we was all on holiday, and you can see it clearer, I think if I put this on a weekly chart, you know, gilts have not looked well for quite some time. So you can go back, you know, gilts have been fine, normally just plod along, they go up. But you can see that around about 2020, gilt started having a bit of a wobble. Now, when we got to August, it really did have a complete, if you want to, Samuel, we'll look at sterling afterwards, right? You can see that gilts had a really bad time. But it was only the last bit when there was all this political, so the fundamentals did kick in. But if you look at where gilts came from, they weren't going up. Now, the problem with the gilt market is it's not going above that 50% level. And really, it needs to go hold above that 50% level. Because what gilts are, they're UK government-backed bonds. That's basically what they are. So the theory behind them, and it is a theory, that used to become, that was like law, but in recent years not so much. But theoretically, the gilt was there, that if there was a problem with FTSE, okay, you'd all jump into gilts because there was a flight to quality. Nothing quality about our governments, past and present. So the gilt market falls. The problem comes is that the majority of pension funds are actually in these gilt markets, okay? And that's where the problem's going to come with the pensions. If the gilt market doesn't rally, then further down the line, we're going to have a bit of a problem. So we really need the gilt market to get above the 50% fib level and try and recover, I think, some of the losses that we've seen since 2020. No one mentioned them. It's only been in the last few weeks that anybody has gone into, oh my God, look at the gilts. Well, you know, I look at them quite a bit when I was working, because obviously trading the FTSE, you needed to look at what the gilt market was doing and what sterling was doing. So let's have a look at what sterling, I'm assuming you want dollar. There we go. Now, as you can see, we've basically followed the gilt market. Okay, excuse all my lines, they come from a way away. Now, I like Fibonacci levels, and what I do is I put them where the market started to tank. And there it is. So although we are recovering quite nicely, we haven't yet broken that 50% level. This is a long-term trend line that I've had on for ages. Too boring to look at, really, because it won't mean anything to you, but it did back in the when I was working. Right, we'll remove that one. Now, how can you look to trade again something like this? What was it that made you look that gilts that sterling was not going any higher? You had this here, this double top in sterling. Oh, look at me, I'm on gilts now. You had this double top in sterling. Okay, that came in at 142.42, and we got up there again at 142.50. So to all intents and purposes, that was the top. Again, if you was trading sterling, you wanted to put your stop above the noise, above where everybody would have been putting their stops. No, so you've got that there, and that is an alert. That's something to say to you, hang on a minute, is sterling going to get any higher? Are we going to break out? If you're long, you cover. If you want to be short, you're doing it just in front of this prior top here and holding it for however long you want to. If you want to buy sterling up at this area, you're not going to buy here. You're going to buy above it. Now, I know that trading mentality in recent years has been, well, if you want to buy a market, why would you buy higher than you could have bought a couple of weeks earlier? Well, it's really simple. While you're in this scenario, the market has more potential to go down than to go up. So you want to be buying it when you know it's made the break above that double top, preferably on a close basis, and then you're much safer by buying it where others aren't getting rid of it and selling short. So that's why you buy higher. It all depends on market sentiment. It depends on market expectations of figures and what have you. But the most, if you just eyeball the sterling chart, you can see clearly it's got a double top. You can see clearly for the next 2 days, it tried to get higher, couldn't, failure, sell it. And that really is as easy as trading is. If you're trading off of medium to long-term charts. I'm not talking about, if somebody's trading off a 5-minute chart, really, it's too much noise. And it's more luck than judgment and flip a coin. But if you can look at a daily chart, you can even put it down to a 5-minute chart, but if you look at where we're going now, I think that we've got a good chance of getting to 120. Oh, as I say that, I'm thinking, 120. It's such a low figure, relatively still, but the expectation is now that we're going to keep on raising rates, which will help the currency. And the dollar was overpriced anyway, and it wasn't so much as dollar strength as opposed to other currency weakness. Does everybody understand that? Yeah? No? Perfect. So now we're going to look at the dollar index. Again, you look when the market makes if I go on to a monthly chart here, you can see that the last time the dollar index got anywhere near where we went was way, way back in the 2000s, okay? Dollar index hasn't been around forever, and it's basically a euro dollar because it's weighted so much in favor of the euro dollar. So you can see that when the dollar, you can get different signals by looking at these different markets. But if you are trading the euro, you really do need to keep your eye on that dollar index, because sometimes the dollar index chart, it's a mirror image, it's upside down. If dollar index go down, you know that the euro is going to go higher. But my point is, you can look at these different charts and maybe, you pick out something. Like if I'm trading the S&P, for example, I quite often look at the NASDAQ, because that can lead it, and you want to be sort of you want to be in front of the market, as opposed to, oh my God, it's going to go down. I'm now selling at the lows, which is what was coming out about the gilt market on the day that it bounced. There was untold people telling me gilts were going here, and they were going, so far down, it was unreal. And that day it bounced and gilts never looked back. Anyway, so when it comes out on the news, it's too late. So what you need to be able to do is interpret what these markets are telling you. So when we made a new high for dollar index, I'm not going to go back 20 odd years because there's no point, but in recent times, so let's go back recent times, okay? So dollar index has been going up and up and up and up and up and up and up, and then it makes a new high and it closes on the lows, okay, or closes not on the highs, okay. So then we start to go down. This is your key. When we couldn't break and hold above here, which is 1378, when we couldn't do that, okay, and we double topped there again, that was your key for the market going lower. There you had your stop above that high there. But this little pattern here was the market at that point didn't want to go any higher. So you automatically, you go into sell mode. And I think for some traders, or for some people who want to be traders, the most difficult thing is to be able to swap from wanting to buy a market to wanting to sell it. Because if you're a natural buyer or a natural seller, sounds weird, but trust me, in the professional world, you most certainly do have these people, okay, who only want to buy or only want to sell. Where I'm different, or was different, is it didn't bother me. I don't care. I want to be long until X happens, and I want to be short until X happens. So you need to be able to shift your thought process. You're not going to be able to do that if you look at a 5-minute chart, or even, to be fair, on an hourly chart. But if you look at a 4-hourly chart and a daily chart, you should be able to switch from one mode to the other. And what you got here was everybody buying dips. So as the market dipped, it didn't go below the previous dip, didn't do that, didn't go below. So all you could see, that you can just eyeball this upward channel, upward. There you go. See, even here, you would have found quite a lot of sellers, but it didn't take long for that to be obliterated, and up we went. But once we've made that, and we've come back, and we've gone back to this point here, you're not buying into dips, because if you look, this is where people would have been buying, and short term, it was right, but then look what happened. And, it doesn't look like this is over yet. So you can combine short-term trading. For me, short-term trading is it's 4 hourly charts. I don't go into any shorter time period because it's just noise. It's just a mess. But you can see that the market, even when it got up there, we had like 6 days of it going up. But that one day downwards was the day where it caught everybody out, and we've continued to go lower. So we'll just look, if you just keep your eye on that dollar index chart, and then we'll just have a look at the euro dollar chart, and you'll see exactly what I mean. Now, with the euro dollar, you didn't get that double base like you got the double top on the Dixie. But you did get this new low, close at the highs. I mean, you do get, when markets turn, what you have to appreciate is that when a market turns from one trend to another, you're going to get a lot of the buyers think they're in control, the sellers think they're in control. So you've got this tug of war going on. So you do get a bit of a mess. But when you see a market, it's got to stay above a prior low or high. So when the market came down and didn't take out this low here, there was always the possibility, and all you can do when you get something like this, you just put on a little trend line. Okay? Now, if you can keep within that trend line, drawing a channel line or whatever it is you want to do, you can see that if you put your stops below there, you would have been fine by staying long of euro dollar. You would have confirmed it with the dollar index, and off we go. Now, are there any questions relating to these two markets? Is there anything and nobody understands? Or is there something somebody wants to ask me about? No? Yes? Okay then. Well, that'll be enough of the euro dollar. Okay, now, one of the markets I like, or I used to like, trading a lot, was dollar CAD. And it really is a lovely little market. Now, bearing in mind, you've got to bear in mind now that we've gone in from, isn't the dollar a wonderful thing, to, do you know what, this dollar looks a sack. So this is how quickly markets change. And this is why I was saying to you, you've got to be in the frame of mind where you can swap out, and you don't want to be a buyer or a seller naturally. You want to be able to just trade what you see. That's the best thing I can tell you really, is just trade what you see, and you shouldn't go far wrong. So can anybody tell me what you can see on this particular chart that gave you a indication that the market was going to go lower? No? Do you all know about chart patterns and what you look for? No? Okay. The dollar CAD is called the loonie, and that's it's called the loonie because well, it is because of the bird, but it's also because of the lunatic way this market trades. Now, you can see by the daily ranges, it's not a market for the faint-hearted. It is a very good market to trade, but not for the faint-hearted, I don't think. But if you can eyeball that head and shoulder top, and you'll get a lot of technical people that will say to you, right, you need to trade once a neckline has broken. That's not true. What you want to do is you want to make as much out of that move as you can possibly get. So, for example, if you're keeping your eye on this market in particular, okay, it does have wild ranges, I won't lie. It's a good market if you're on the right side of it. But once it's made that and that, you are looking for it to either break that or stop going higher. Okay, so this gives you a perfect head and shoulder pattern. If you'd have sold the break of this, you'd have still made money. But if you'd have sold the right shoulder up here, what you can do, you can preempt. You should always preempt a market because that's what we're in the business of doing. If you can preempt that, then you should be able to take a lot more out of the market than if you wait for patterns to evolve and follow them. It's difficult to preempt a double top or a double bottom because, until it's made it, you can't really trade because it could still be in an uptrend or in a downtrend. But with this pattern, with the head and shoulders, you can do that. You can preempt it. You can say, well, maybe that is going to stop there and maybe it's going to go lower. Do I think the dollar's had enough on the top side? Yep, could be. Okay, let's go for it. So you're selling in this vicinity with your stops above this vicinity. You're buying again if it breaks above there, which it didn't do. But if you want to be, this happened in one day. Not unusual for the loonie, it does do it. But you see how when it got up there, it didn't have the oomph behind it to continue to go higher. So you had this battle of the bulls and the bears, and with the other markets that were doing exactly the same thing, dollar-based, then obviously this had only one way to go. That was lower. So there was a strengthening of the Canadian or weakening of the dollar. Okay? You could tie that in also with the dollar index. They're not correlated, dollar CAD and a dollar index in any significant way. But, if the dollar index goes up, the dollar will go up. If the dollar index goes down, the dollar will go down. It's that simple. Okay? So with the dollar index doing what it did, you could see that dollar CAD was going to go lower, as did dollar Swiss, dollar yen, all the dollar-based went lower, and their currency, your major currencies, all started to go on the top side. Can everybody see that, please? I would like a little yes or no before I carry on. Sure. Okay. Now the other market that has been, all these markets have been really, since I retired, have been really, really interesting. But if you look at, we're going to look at oil now. So why we're paying lots of money for energy at the moment, I'm not too sure about, because you can see as from March like this year, okay, we couldn't get any higher. We tried to go up, they tried to push it a lot up very much, and then oil just went back to where it was before all this nonsense. So what does oil look like it's going to do at the moment? It doesn't look very big, although you do have this head and shoulder pan. Okay, so that's one thing to be aware of. But by and large, I think that oil looks like it's going to come a bit lower. If you remember, also, a lot of these markets are, they go in cycles. So you know that all the big oil companies are going to be getting their oil in ready for the winter. So normally you see a surge in oil prices July, August, September, that sort of time. We didn't see a surge. We saw a little move up, and then it carried on the way it was going to go anyway. But these oil companies, they get in huge amounts of oil on the spot, and they store it. So you could still be using stuff or oil that they bought back here. I doubt it. It's just that they can put oil up at the drop of the hat when it goes up, but in reality, when it comes down, they tend not to do it so quick. Does anybody want to say anything on oil? Okay, now my voice is beginning to break up, so I'm really struggling with this. So does anybody want to ask me any questions or have a look at something else like Bitcoin? Let me look at Bitcoin. So again, not great. It gets everybody suckered in and pukes. Does anybody want to talk about anything else? Otherwise, to be fair, I'm going to wind this up now because I'm losing my voice by the second. I've got about 5 minutes in me if somebody wants to ask me a question. No? Okay. You want my thoughts on Euro what? MXN? I don't even know what MXN is. What's the name of the currency? Oh, Harry, if I had an opinion on the Mexican peso, I promise you I would tell you. But as I don't, and I don't even have it on my system, how do I use the price actions on gold? Um, it's all right, I did try. How do I use the price actions on gold? You have to have in your mind what way you think the market is going to go. Okay? When markets are in a downtrend, you see it quite clearly. Because the peaks never reach the previous peaks and so on and so forth. So you can tell here we're in a downtrend. When you start to base here, like that is a little bearish flag, okay? So that's a little bearish flag as well. So when you see that the market first when you see that the market first gets up, fails, closes at the lows of the day, that's your key that we're still in that downtrend and we're going to keep going. So it's very difficult to give you 40 years of experience in 3/4 of an hour. It's very, very difficult. I'm not a fundamental trader at all. As far as I can, by what I could tell, that the midterm elections, I did watch them, didn't have a clue. Last time I saw them, they were 48, 49, and they needed to get to 52 to win. I think the House has become Republic, but that, that's made gold go up. It's made the dollar get weaker, but that's a good thing. I think Biden's hands are going to be tied right now. It's not a bad thing. It should be really sort of taken away and put into some nice place with a book where he can read for a while. I think the market expected a whitewash of Republicans, and they didn't get it. Why they didn't get it is, I don't know. I'm not American, but they didn't get it. So I don't think the market acted. I don't think it acted out of sync, really. It reacted in the way it should have reacted. Given what happened, but with all the markets, even before the midterms, you could see that they were beginning to top or base. So it was all coming to fruition that they were doing whatever it was they were doing, topping and basing, even before last week. So it didn't really, I don't think it had any effect on the market, because it was telling you, God was telling you back here they wanted to go higher. Okay. Do you know what? I don't do it anymore. I retired last year. I do these for FX Street because they're my favourite platform, and it keeps my hand in. Unfortunately, you can't follow my analysis. You can look me up on YouTube where you would see all various strategies and charts that I've done, but I don't do this anymore. 40 years is enough for me, I'm afraid. So I just now want to enjoy my retirement. But I've come to the close of this webinar. Thanks ever such a lot. You've been good. And I hope you've taken something away from this webinar for you. I'll hand you back over now. Thanks a lot for joining. I'll hand you back over now to FX Street and mute myself.